Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, so bulls showed some signs of life yesterday. We touched the upper Bollinger Band, or came pretty darn close to it. Traded back down to the 50-day exponential moving average. The 50-day exponential moving average has acted as support in the overnight. You got a Globex low at 82.75. Yesterday's Globex low was 81.5. So this 81.82 area has held up pretty well on support. The bulls need to push today and get up above, make a new, they really need to make a new weekly high, honestly. They need to get up above 18.5 if they're going to really put the fear into the bears. The bears need to maintain price below 2,700. We talked about how anything they do from up above really doesn't matter. It's just a bunch of noise unless they can get below 2,700 and stay there. They did that and they're staying there. They need to do that. If they can stay there, they can go back to work on the 9-day, simple down at 78.5. They can go to work on the 100-day down in the 72, 73 area, and ultimately over the course of the next few sessions push back to the daily mid band. Remember, we talked about lower band, middle band, upper band, middle band, lower band. It's that kind of market, right? The bulls can put that process off if they can get above 18, engage the upper band, and have in everybody's mind with a strong Friday that we could be beginning next week, with an upper band ride. And that would just be let's fight price, and people will be shorting it and adding and doing all kinds of damage to themselves. Not us, but people will. And they'll struggle to they'll walk this thing all the way back up and test some of these breakdown areas from back in March, areas like 27.44. So the bears want to avoid that. The best way to avoid it: stay below 2,700. Go to work on some lower levels. The bears are in the conversation down here. They're not in the conversation up here. All right, hourly chart. We talked about in the room, we talked about on this webcast, we talked about in the webinar on Wednesday afternoon. We talked about all this compression, how the compression is not sustainable. It started to show some chinks in the armor while we were doing the webinar with a couple closes below the hourly mid band. What you saw yesterday was expansion. Compression, expansion. Okay, set up very nicely for us in the room. This is going to be an inflection point. You've got the daily pivot, hourly mid. It's going to have to defend these areas if the bears are going to survive. The bears need to get back below the hourly mid band here and retest some of these lower areas from this morning and yesterday afternoon. If they can do that, then they're part of the conversation. You got the monthly pivot down here at 26.7692. Don't forget about that one. All right, everybody have a fantastic day. Have a fantastic weekend. To all the new folks that are coming in, welcome. It's a fantastic time to start. You got a huge group of people you can start with and learn with. It's great. This market has been a little slower this week, but I don't think that the absence of volatility is really sustainable. There's just too many things going on in too many different places in the world, and you can see when something hits the wire in the afternoon. We had that big spike up to 98. You can see how it's quailed to go in either direction. Pay attention to 2,700. Pay attention to the monthly pivot. Pay attention to 2720 on the upside. It could make for a nice trading range today. I will be out with some stuff on social later in the afternoon. Until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.